The market traded in a really tight range today with the SPY closing just below the 580 mark. 580 is our largest gamma exposure concentration. We've been watching this level here for the entire week, and we're just bumping right up against it here. This purple bar is our gamma exposure. And so we are watching very closely to see if the market can get through this 580 level and on up to the 585 strike. Obviously, this is going to be a resistance zone up here, so we want to be watching that very closely, paying attention to this GEX strike here at 585, as well as the volume tomorrow, especially if tomorrow is an up day. On the downside, however, especially after yesterday's trading action where we dipped below 575 just briefly, and to be specific, it's going to be the 574.42 mark is a very crucial level. I think if we come back down to this level and break it, that's going to be bad news, at least on the intermediate term for the market. You can see this is a clear division here going back for the entire month of October. Bouncing up here into resistance, finally breaking through that around October 7th. And ever since then, that has been now a support.
Yeah, Anthony, what I have on my screen now is the VIX. And this is something else that's of concern is that, we had this kind of a flag pattern basically as the VIX declined from the 22, 23 area down to where it bottomed right around 18. And the Keltner channels have turned upward, both the bottom and top channel. And now twice the VIX has pierced the top of the channel. And you look back here in September, we spiked right through the top of the channel. So in addition to the VIX, Anthony, the NASDAQ's a good example. I pulled up QQQ, and you can see we're basically sandwiched between the middle Keltner channel, which is this blue line close to my mouse cursor, and the whole moving average. I'd rather wait to see one of these break. I mean, we're talking about a range that's basically a little more than 1%. So if we can get above 495, or if we drop below 488, that's going to set the stage, I think, for either a move to 508, or we could drop down to 470. So we really are near this breaking point. I know you're about to talk about earnings, which is great because with all the big tech earnings next week, that leaves a lot of uncertainty about where we end up.
Yeah, thanks, Sean. As far as earnings go, tomorrow we don't see a ton of huge reports coming out. Nothing that's going to be market moving, in my opinion. Next week, though, is where the real action takes place. You can see we've got it sorted by market cap here. All the big dogs are reporting. We've got Apple, Microsoft, Google, Amazon, Meta. Of course, we had Nvidia and Netflix already reporting this week. So next week is going to be the largest impact as far as earnings are concerned on the market. Most of those reports are coming in the back half of the week, as you can see here on Halloween, October 30th, October 29th. That, along with elections the following week, is going to be hugely important for the market, huge moves potentially happening. So we want to be watching that, watching the gamma exposure related to these names that are reporting as well. So let's just look at a few of these big dogs that are reporting next week. Apple, first of all, we can see gamma exposure is concentrated on the upside between 235 and 250. Looks bullish in my opinion. Same thing when we look at Meta. Meta having a bullish look here, even though it's been trending lower over the past week. Similar look for Microsoft. Most of the gamma exposure is on the upside in positive territory. And same thing when we're looking at Amazon. So just taking a quick bird's eye view of the big dogs that are reporting next week. Gamma exposure looks positive throughout. This basically is telling us that market participants are bullishly positioned. Open interest is to the upside predominantly. And now the market can be wrong at times. And so this is not a guarantee, of course, that all of these names are going to rally by their earnings reports. But it is interesting to me that the market apparently believes, at least in the options market, that we're going to see largely positive results next week. So we'll see how that turns out. I'm definitely going to be watching that very closely.
All right, Anthony, I'm going to go over Johnson & Johnson. We've mentioned this name before. at least in the not too distant past. But amidst the market turmoil, I wanted to point out that gamma is still positive. There's a little bit more room to go here before it's at an extreme as far as the GEX intensity gauge. We have this big gamma cluster at 170. We are below this cluster here, which is 165. I don't know if we would go to 160 or not, but typically if we're below a large gamma cluster, I'm going to start looking at the next largest one as a potential spot for a reversal, or the zero gamma level, which is 162. So somewhere between 160 and 162, if we hold those levels, I'm going to, potentially look for that 170. And the chart also shows that that's potentially a good target to watch for. We are below the whole moving average, but the middle Keltner's at 162, that zero gamma level, and holding that should give us a shot at reaching the 168 to 170 area. So, this is potentially a stock to look at on weakness.
Next, I just want to turn to the metals real quick. I'll start with SLV. We mentioned SLV last week as it was running up towards the 30 level, continued on nearly tagging this 32 strike here. We did have a pullback the last couple of days, and it looks like we're finding some support. We've got our lower dealer cluster zone that is formed here at $30.50, and you can see this is support resistance zone through October. So the fact that we're coming back down in here looks to be like pretty interesting for another potential leg up. At least from a risk reward perspective, we could see a bounce up into this 32 strike with stops just below 30. And if we just pull the chart down a little bit, you can see that positive gamma exposure goes all the way up to the 35 strike. This is something we're watching as a possible year-end target for silver. That'd be a pretty significant move over the course of the next couple of months. So that's definitely something to keep an eye on. And that brings me to GLD. GLD crossed the big $250 mark. And you can see it's been running since October 7th from the 240 strike up to nearly 255 now. That 255 strike is the largest gamma exposure concentration, and that's our intermediate target here in the upcoming couple of weeks. So it wouldn't be surprising to me after this consolidation period we've had over the past week or so to see a continuation tagging this 255 level before we see at least some sort of pullback or consolidation before the next leg higher. We're still bullish on the metals in general, and it does look like the market continues to be fairly bullish on this. I will note though that we did have some, I would say, decent sized volume in the options market coming in at some of these lower strikes, 245 and 250. That is a little bit unusual, but I would need to see this continuing, for the next couple of days before I get too worried about that. But not out of the question to pull back at least to this 250 strike here in the next week or so, but I think the odds are tilted for a move up to the 255 strike first. So we'll be taking a look at that in our community Discord. We've traded GLD a number of times this year on this big move that it's had in 2024. Don't forget, you guys can check out our community Discord absolutely free. I'll put a link in the description below. There's a ton of great traders in there sharing ideas and market analysis throughout the day. Definitely check that out when you get a chance. Also, be sure to head over to geeksoffinance.com if you want to check out our gamma exposure dashboard and option flow analytic. I'll put a link in the description below for you to check that out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.